Well, my next guest says the Fed's powers are actually still pretty limited. Joining me now is Libby Cantrill, Pimco's head of public policy. Libby, it's great to see you again. Welcome. And what do you mean by that?
Yeah, I mean, what we are talking about is the administration's ability to ensure deposits, to provide a broad-based guarantee, Kelly. It is actually very much right what Senator Loomis said. The Federal Reserve has a lot of discretion regarding the requirements that they can impose on banks with assets over $100 billion. There's been a lot of focus on Senate Bill 2155. That was the 2018 regulatory relief bill. And very specifically, that bill still allowed for the Fed to have discretion again over in terms of imposing liquidity and capital requirements. I think Vice Chair Barr very much previewed that very likely the Fed will use that discretion going forward. So, yeah, just to be clear, our comments have been really about the uninsured depositors, whether the administration has a unilateral ability to increase that, that $250K level or to provide a blanketed guarantee. Our view is they don't. But again, the Fed does have and did have discretion over banks with assets over $100 billion, which, of course, would have captured SVB and Signature Bank.
So your comments, Libby, echo what we heard from Mark Calabria earlier this hour. He said he also thinks there's basically a 30% chance that anything happens on the FDIC cap, which if nothing's going to happen, then that leaves us right back where we started from, doesn't it? Maybe that explains why the regional banks are trading the way they are today.
Yeah, exactly. And I think, Kelly, this was very much on display in today's hearing. It was really about a postmortem about the lack of Federal Reserve supervision, about the potential gaps in regulation, about the sale of SVB and Signature Bank. It really wasn't about what Congress plans to do going forward. There were some senators alluding to potential legislation, but there doesn't seem to be unanimity on Capitol Hill, at least as of now, to move forward, whether it is the increase in the deposit guarantee level or a broad base guarantee. We think the threshold for Congress to act is incredibly high, particularly given the split nature of Congress. But also, as you heard today, there is a lot of kind of hand-wringing about Fed supervision and then also about just the management, broadly speaking, of SVB as well.
So if I'm either a wealthy American household or a business with funds over this level, I'm listening to this and going, all right, I better make sure that I have my money spread around at different bank accounts under that cap or at larger institutions that are, I guess, implicitly too big to fail and that sort of thing. This just, I guess, then raises the question of what happens if we get into a situation again. Are we still facing the issue of bank runs, or is this more now a question of solvency for a lot of the smaller and regional banks across the country? I mean, and honestly, that could take months or quarters or really years to fully play out.
Yeah, and I think, our banking analysts here at Pimco would say that regional banks are not a monolith. Some banks have dealt with their sort of duration mismatch better than others. And so to sort of characterize them with a broad brushstroke is probably a mistake. I think what you've seen with Secretary Yellen and Fed Chair Powell is that they're trying to assuage folks that, yes, their deposits are safe, that the administration does have some tools. And of course, what we did see with the FDIC and Treasury is that they do have tools for those banks that are put into receivership. And we don't question those. It's just really a question of whether the administration can provide a broad-based deposit insurance guarantee. And I think our view is no, this is statutory. This is really falls within the limits of Congress.